Hello, friends. We all know that the MSME sector is the backbone of any economy and it plays a pivotal role in the country's economic fabric. In the Indian context, the MSME sector contributes to over 6% of the manufacturing GDP and nearly 25% of the service GDP. Yet, they face constraints in obtaining optimal finance and cash flows for scaling up their operation. Friends, I'm CA Lekh from Nyoliwala, and today I'm going to throw some light on TreDS, a platform where the issue of liquidity crunch and raising finances can be addressed to a great extent. Given the lockdown scenario, which has put all the economies across the globe on a standstill, I'm pretty sure the worst hit would be the MSME sector in terms of liquidity. So it becomes more imperative to know and understand how a MSME unit can maintain a healthy liquidity position during this lockdown and even after that. What is TREDS? TREDS is an acronym for Trade Receivable Discounting System. It is a scheme introduced by RBI in the year 2014 to address the financing related issues of the MSME sector. TREDS is basically a digital platform authorized by RBI under the Payment and Settlement Systems Act 2007 for facilitating the discounting of trade receivables of MSME through multiple financiers. Friends, we all must have heard about the term called discounting of bills of exchange, but trades also enable us to discount our trade receivables, but only of the MSME units, and that too through multiple financiers in order to get best discounting rates. Since it is a platform which is online, one needs to register itself on that platform. We also need to understand, is it mandatory to register on this platform or is it a voluntary exercise? The Department of MSME, Government of India, on 2nd November 2018, via its notification, have compulsorily asked the following entities to register itself on a TREDS platform. Any company which is registered under the Companies Act and having a turnover of over 500 crore rupees. All central PSUs. So these two categories of entity have to compulsorily register itself on any of the TREDS platform available in India. Since there is a mandatory clause for registration, the Department of MSME has appointed the registrar of companies of each state to be the competent authority to monitor the compliance of this notification. In fact, the Ministry of Corporate Affairs have issued a guidelines and a directive to ICSI and its member to check the compliance of this notification on a regular basis. How does one register itself on a TREDS platform? The process of registration on a TRED platform is quite simple and easy. It is a one-time process wherein any entity willing to be a participant on the TREDS platform may submit the KYC document, which is similar to KYC compliance, which an entity does for its bank account. A resolution or a document specifying the authorized person to access the platform, indemnity if so required, and an agreement has to be entered into between the participants and the platform on the agreed upon terms and conditions. I've used the word participants quite a few times, so it becomes more important to understand who can be a participant on the TREDS platform. Primarily, there are only three categories of participants. The first one being supplier or seller, the next one being buyer, and the last one being the financer. Any entity who qualifies to be a MSME unit as per Section 7 of the MSME Act 2006 can register itself as a supplier or seller on TreDS platform. Any company or entity, including government departments, PSUs, availing goods or services from MSME units can register itself on the TreDS platform as a buyer. Friends, I would like to highlight a very basic difference between supplier and the buyer. The very basic difference between supplier and the buyer is the supplier or the seller needs to be a MSME unit to register itself as a supplier on the TreDS platform. However, the buyer need not be a MSME unit to register itself on a TreDS platform. The only condition attached to an entity to register itself as a buyer on the TreDS platform is that the entity should be availing goods or services from the MSME units. Whereas in terms of suppliers or sellers, it is mandatory for the entity to be a MSME unit in terms of Section 7 of the MSME Act. As I told you, that the basic objective of a TreDS platform is to address the finance related issues of the MSME unit. It is important to have banks and NBFCs as financiers on the TreDS platform. However, such banks or NBFC factoring agents needs to be authorized by RBI to act as financiers on the TreDS platform. I've referred to this section of MSME Act, so it is important to know as to who qualifies to be called as a MSME unit. Any unit which has a turnover of up to 5 crore rupees is referred to as a micro unit. Similarly, any unit which has a turnover between 5 crores to 75 crores is referred to as a small unit. And any unit which has a turnover between 75 crores to 250 crores is referred to as a medium unit. Friends, the definition of MSME unit as per Section 7 of the MSME Act was amended very recently. Earlier, the definition of an MSME unit was based on the investments in plant and machinery. The Government of India made this amendment in order to promote its initiative of ease of doing business and inculcate growth-oriented culture in the MSME units as well. The process flow. Since you will be registering on a platform which is of a third party, it becomes very significant to understand how the platform operates. The first step is creating and accepting the FU. FU is factoring unit. Friends, we all issue invoice when we provide services or supply goods to a buyer. We may receive cash or the same may be booked as debtor upon sale. We may receive a bills of exchange in return to our goods or services. Factoring unit is a standard nomenclature for invoices or bills of exchange issued or received on the buyer or from the buyer. Any seller registered on a platform may create the factoring unit and the buyer may accept the same. It may be vice versa as well, that the buyer creates the factoring unit and the seller accepts the same. The next step is discounting and rediscounting. Since the TreDS platform onboards multiple financiers, the discounting takes place in terms of an e-auction, wherein the best bid wins. In the next phase, the TreDS platform involves the other financier and gets the factoring unit rediscounted, which in turn assigns the factoring unit to the ultimate financer. MIS reporting. Since the platform is online, all the steps or all the transactions which have been taken during the course of time gets notified to the participants on the platform, and the entity or the participants may take necessary action based on such notifications. Submission of settlement file. After the deal has been closed, a settlement file is generated on the platform, which needs to be submitted to the banks for the disbursal of funds and receipt of funds as well. What is the settlement process on the TreDS platform between the seller and the financer? As soon as the settlement file is generated, it is then sent to the bank of the financer. The bank of the financer disburses the funds on T plus 2 days on any of the agreed payment system between the seller and the financer. Between the buyer and the ultimate financer, the platform generates the payment obligation on the due date of the invoice and sends it to the bank of the buyer, which in turn debits the fund and transfers the fund to the ultimate financer's account. Since it is an online platform, the plat there may be settlement failures as well on account of less funds in the bank accounts. So a separate recourse mechanism has to be put in place by the platform to handle such failures. Why TreDS? You all must be wondering that we all have banks nearby. Why do we need to go to an online platform? Why do we not take loan from banks? Friends, the first and foremost reason of opting for TreDS is it is cheaper than traditional business loans. Yes, in case where an entity takes a working capital limit from any bank, it needs to pay a processing fee, it needs to pay renewal charges, it needs to pay interest. Whereas in terms of discounting, it just needs to pay the discounting rate, which is near to the MCLR, but it varies on a case to case basis based on the credit rating of the buyer. In case of bank loans, one needs to give a collateral security as well, and the process takes time. Whereas on TreDS, it is a collateral free loan or finance with minimum documentation. TreDS is basically an off balance sheet finance item. Any finance needs which has been taken care by TreDS platform is not reflected on your balance sheet. Thereby, there is no effect on your debt equity ratio as well. It also ensures healthy relationship with the customer. How? As soon as the factoring unit is discounted and you receive the funds, the buyer and the financer needs to deal with subsequent steps. You are in no way involved in case of default by the buyer. So this ensures that you don't enter into any sort of a litigation or a dispute with the customer. Friends, I hope this presentation would be helpful in the current scenario to manage the liquidity crunch. Thank you.